Oh, welcome back, ladies and gentlemen, boys and girls. John Hancock and Michael Kelly in for Charlie Brennan will be in today and tomorrow. Charlie will be back with you in 2014, and as you prepare for 2014, there's some last-minute things you might want to pay attention to as it relates to your taxes. And joining us now to discuss some of those things is a tax expert, IRS problem-solving specialist, and CPA, Joe Mastriano. Joe, welcome to KMOX.
Well, good morning. Glad to be here.
Glad to have you. There's some tax issues that are going to be disappearing after 2013.
Deductions for sales tax. For those of you that live in states that don't have income tax, you get a deduction for sales tax instead, and that's expiring. So anyone that uses it needs to spend as much money as they can by the end of the year. Also, if you have a business and you're deducting assets, a lot of people like that quick 179 deduction where you can take the whole thing at once.
Mm-hmm.
And they're reducing it from $500,000 down to $25,000. So those of you who have spent or intend to spend more than $25,000 this year need to make the rest of those expenses by the end of the year.
Yeah, exactly right. And what about anything that must be done before midnight tomorrow in terms of affecting your taxes, whether or not the tax break goes away or not? There are some specific things that people have to do.
Well, yes, certain retirement accounts, the contributions, always get with your CPA, tax advisor. Certain retirement plans, the contributions do not extend to the due date of the return. They have to be done by the end of the year, things like that. But mostly people should be making their tax deposits. A lot of people find out too late how much they owe. So I always recommend that people get a free tax return from Tax Act or something, throw some numbers in there and take a look. If you have any income that you can postpone to next year, then do that. If you have any expenses, most people are on a calendar year, and if you make those expenses before the end of the year, you'll get a deduction for it, including storm windows. That's expiring too. Qualified energy efficient purchases for the home. That goes away at the end of this year.
As people are preparing to do their taxes, more and more alternatives are out there where they can file their taxes through an online software. When it comes down to it, what's most cost effective? Looking at using a CPA, as I asked a CPA, or one of these new softwares that's out there if you've got relatively simple taxes?
People should, can e-file, but that's the venue for the person preparing it should always be a licensed professional CPA or an attorney, a company licensed by their state. These IRS rep companies coming up now and these quickie tax preparation companies don't cut it anymore. Your return, I've got a 4-part program for people not to be audited. Or you can download it from my website at Killer IRS. Just Google Killer IRS and get to it. That's my official trademark. The site is taxproblem.org. What I'm trying to say is that no longer can you get by without explaining on your tax return why you're taking deductions and what evidence you have. And that level of knowledge is not going to be part of, somebody that just read a tax guide on how to put the numbers into the returns. So the laws have changed, the rules have changed. The IRS is auditing everybody they can find. They're taking deposits in your checking account and treating it as income unless you can prove otherwise. It's gotten crazy out there.
Well, crazy indeed. For some Americans, they've been able to deduct some of the tuition and fees for their school-aged, college-aged children. That deduction's going away, but who does that apply to?
Well, it does. It is going away. It applies to, for your college tuition. It's good up to the first 3 months. So the word is prepay next semester's tuition if you can.
Mm-hmm.
And if you do it before the end of the year, you'll get the deduction. There's I believe it's part of the Opportunity Act.
Yeah, a lot of people, a lot of older folks, of course, they've got this this required minimum withdrawal out of the IRA accounts, but a lot of older senior citizens have used the IRA funds to make charitable donations in the past. That one's going away as well.
Yes, absolutely. You got to be careful because, if the provision lets you contribute that money directly to charity, but you've got to make sure it's a qualifying charity and it has to be done correctly.
Yeah, exactly.
Again, hence needs for people knowledgeable in that area.
Yeah, no question about it. And what's the best time? I always kind of wait until, I don't know, March or so to even take a look at filling out the taxes. Is that smart, or should people start in on this stuff earlier?
No, you're a lot of people that are on W-2s don't realize that you're responsible for taxes during the year. So if you have a spouse with a private business that earns extra income, or you make money on your stocks, you're expected to make quarterly estimates. And the fourth quarter is due January 15th. So it's a very wise thing also for planning on what expenses that I previously talked about that you want to make during the year. It's always wise to figure that out ahead of time so that you're not paying additional taxes, interest, and penalties.
All right, good advice for the taxpayer. That's Joe Mastriano. He's a CPA. He's an IRS problem specialist. You can find him at Killer IRS. Just Google up Killer IRS, and you can find him. Joe, thanks so much for joining us, and have a Happy New Year.
Well, you're welcome. Same to you.
All right.
How about that website address, huh? Killer IRS.
Yeah, that's a good one, man. You know, the IRS has been in the news a little bit this year. I'm surprised that didn't make the list of the top 10 news stories.
Yeah, good point. Forgot about that. The IRS scandal that was looking into